Hello everyone, welcome back to Banking and Finance with Chitrak. Today we will continue with the explanation of the chapter of AML KYC exam. We will be discussing about the customer identification procedure and risk management, which is the second chapter of module 2, that is KYC. So let's start this chapter.
Now, this chapter is divided into 11 sections. What are those? Customer identification, the definitions for KYC, what are the basic identification requirements, establishing identity of a customer or risk categorization of customer, product and delivery channels, customer due diligence, UCID or unique customer identification code, review of the risk categorization of different kinds of products, then periodic KYC updation process. So these are all the sections of this chapter. Now we'll go through all of these one by one. First, let's understand what is the objective of this chapter. Basically, this chapter will help us understand the requirements of customer identifications. We'll learn about the beneficial owners, which is a very important concept to understand the actual owner of any company or any partnership organization, and we will also know about the importance of risk categorization of different kinds, like I said, of customer, products or delivery channels. Then we'll know about the adaptation of risk based approach for the identification of customers. We'll also learn about OVD or officially valid documents, which is a very fundamental thing for anti money laundering and countering the financing of terrorism. So let's go through the first point. Customer identification. What is this? This is basically the core basis or fundamental basis of KYC and anti-money laundering measures, and it deals with the genuineness of customers and also about customer due diligence. There are various international guidelines and also domestic regulation which emphasize the importance of these requirements. Now we learn about some definitions related to KYC. First, customer. Generally, customer means someone who is at the receiving end of a service. But for KYC purposes, the term customer is more broader than its traditional meaning. Reserve Bank of India defines customer as a person who is engaged in a financial transaction or activity with a reporting entity and includes a person on whose behalf the person who is engaged in the transaction or activity is acting. So basically, it includes the individuals who are directly dealing with the bank and those who are connected in transactions, and persons owning the entity for which the transaction is being conducted. For example, partnership firm, the partners are the owners of the entity who are conducting the transaction, right? So this is basically what customer means with respect to KYC. Also, one thing, the beneficiaries of transactions are also called customers in respect of KYC. Then, person. Under the PML or the Prevention of Money Laundering Act, a person means any individual, an HUF or Hindu undivided family, a company, firm, or association of persons or a body of individuals, whether it is incorporated or not, every artificial judicial person, and any agency, office, or branch owned or controlled by any of the above these persons. We have beneficial owner. What is this? Let's understand. There is a firm which has around 30 members and it transacts through the banking channels. So it becomes important to identify who is the natural person or who is the owner or the main person who is in control of the firm. So that person is all actually behind the banking transaction, and it becomes important for the financial institutions to know who those natural persons are. The concept of beneficial owner is used to ensure that the key individuals of any transaction is known to the bank, and there exist some specific norms to determine the beneficial owners of various kinds of entities. Even for some complex structures, what is the criteria for being a beneficial owner? Only a natural person is a beneficial owner. Like a company or a partnership firm or any kind of charity or any kind of body which is not a natural person in living and soul, they cannot be a beneficial owner. So like a judicial person cannot be a beneficial owner. A natural person fulfilling any of the following criteria alone or with other is a beneficial owner. What are the criteria? Having ownership of a certain threshold value, like that person has to own a certain amount of value of the company, then enjoy some benefits of certain threshold value, or also they can have exercise control over the entity, like they are the ones who control the organization. Now, what is chain ownership? The definition of beneficial owner implies examining the holding structure of entities down to the level where the natural person who qualify as beneficial owner can be determined and identified. For example, a company who has a different patterns of holding structure, that company may have n number of multiple number of owners, and everyone has a limited amount of holding power. So the bank or the financial institution must have the idea of the holding structure of that company to understand who is the main person behind the financial transactions. Let's suppose a beneficial owner cannot be identified in some complex arrangement. For example, in a very big private company or a very big partnership firm or association, the natural person holding the position of senior managing official, let's suppose the CEO or the chairman of the organization, is treated as the beneficial owner of the entity. So we have now some norms for determining the beneficial owner. This is a very important concept. Let's go through this. Type of entity, we have criteria and the threshold value. So a company, either A of A or B, what is A? Has a controlling ownership interest, ownership of or entitlement to shares or capital or profits, or exercises control through other means like right to appoint majority directors or control management or policy decisions by shareholding management rights or shareholders agreements or voting agreements. So these two categories exist in a company. So anyone who has any of these two categories and has a threshold value of more than 25% power, they are considered the beneficial owner. Next, in case of partnership firm, if the ownership or entitlement to capital or profits alone or together or through one or more judicial person is more than 15%, then that person is considered the BO. Next, in case of unincorporated association or body of individuals, that person has ownership of or entitlement to the property or capital or profits of more than 15%, then that person is considered the BO. In case of trust, if it's an author or trustee or beneficiaries with interest of 15% or more, or any other natural person exercising the ultimate effective control over the trust through a chain of control or ownership, then they are called the beneficial owner. Another thing is, if the customer or owner of controlling interest is a company listed on a stock exchange, for example a public company or a subsidiary of such company, it's not necessary to identify and verify any shareholders or beneficial owners of such company. So you don't have to verify the shareholder or BO of such companies who are publicly listed and are subsidiary of a big company. So let's understand this in more detail through an illustration. Let's suppose there's a company PQR and the shareholders are A, B, C, D, E. A has 10% share with the right to appoint 60% of the board. B has 40% of the share, C 15, D 20 and E 15%. So who are going to be the beneficial owners? Is B has 40% ownership, which meets the 25% shareholding threshold for PQR. She is going to be the beneficial owner. Also, Mr. A has the right to appoint 60% of the board members, so he is also considered as the beneficial owner. Now, let's suppose D and Miss E are husband and wife and act together for all matters. So the combined share becomes 35%. So they are also considered as the beneficial owner. Now we'll understand about the basics of identification requirement. Well, what's the purpose of this identification requirement? Basically, it is to satisfy about the genuineness of the customer or the identity of the customer, and also to understand the activity of that customer to prevent the money laundering and terrorism financing. What are the principal elements of identification requirements? First of all, identifying and verifying the customer or the beneficial owner, including obtaining the OVDs or the officially valid documents. Then we need to obtain sufficient information to establish the identity of this customer, whether they are regular or occasional customer, until and unless the bank is satisfied with the information they provide. Then we need to ascertain the purpose of the intended nature of the banking relationship and understand the activity. So suppose a person is remitting a money, we need to understand why that person is remitting that money and where he is remitting. Banks must also be able to demonstrate to regulatory authorities that due diligence was appropriate to the assessed risk by recording and preserving evidence. So, the regulatory authorities like RBI or NABARD may sometimes ask the banks to provide the details of a customer. Then, we should be able to provide them the KYCs or CDDs. We need to justify that the bank was satisfied with the due diligence. Now, what are the different stages of customer identification? First, when establishing a relationship for the first time. For example, someone opening the account for the first time or they are taking some credit facility, then we need to establish a relationship. Then for any single transaction of a non-customer, either domestic or international, or of unusual nature or amount. So let's suppose a customer just came to you and is telling you that he needs to remit some amount to somewhere. You need to be very aware and you need to get all the required documents before making that remittance. Then when rechecking existing customer information is deemed necessary. So let's suppose you get a tip that that customer is involved in some money laundering activities, then you may need to recheck the customer identifications or recheck the KYCs of that existing customer. Then transactions related to trading in securities or derivatives. Also, when you are selling a third party product or selling bank's own product, you need the customer identification documents. Then care in information to be obtained. Well, mandatory information for KYC norms needs to be obtained. Like customer is obliged to provide the information as and when required. Let's suppose any further information if needed for due diligence is to be obtained, and if you think that some more informations are needed, you must get that, and extra information is to be obtained after customer consent. Let's suppose you are taking the financial statement of a small businessman while opening the account. Now that financial statement is not said in the basic requirements of customer identifications, then you must take the customer's consent before demanding that financial statement. Now, how to establish the identities of the customers? The basic is OVD or officially valid documents. Rule 9 of the Prevention of Money Laundering Rules and Rule 2D of the RBI Master Circular or Direction specifies the documents needed as officially valid documents for confirming the identity and address proof of a customer. What are the documents? These documents like passport, driving license, proof of possession of Aadhaar number, voter identity card or job card are valid for both identity and address proof. But some documents like utility bill of electricity or telephone or postpaid, property or municipal tax receipt, pension or family pension payment, that is PPO, letter of allotment of accommodation from employer in PSUs, these are valid only as address proof and for simplified measures applied, and if the OVD or officially valid document doesn't have the updated address, then only you can take these extra CDDs. Now, if a person has changed their name, the documents with the old name can be accepted provided that they submit the marriage certificate. Like if a woman has changed their name after marriage, then the marriage certificate from the state government can be taken, or if any name has been changed by this person, then a gazetted notification indicating such change should be taken. In case of updated address proof, the OVD submitted, if it doesn't contain the updated address, then any of the OVD that I said here valid as the address proof can be submitted, and the OVD with the updated address need to be submitted within the 3 months. For foreign nationals, the address proof can be taken as a document issued by the government department of the foreign jurisdiction or a letter issued by the foreign embassy. And how can we accept the OVDs? We need to have the officially valid documents self certified by the customer, and this self certified copy needs to be again certified by the officer. Now, the validation and verification of documents. KYC documents or the OVDs are validated and verified through the issuing authorities' websites or facilities. How can you verify the permanent account number or PAN? It can be verified from the verification facility of the issuing authority. The Aadhaar number can be verified from the authentication or verification mode by UIDAI, and the digital signature can be verified from the e-document obtained. There is also facility to eKYC Aadhaar enabled verification, which is a service provided by UIDAI, and customer information and photographs exists in the eKYC facility. Information is available. What kind of information available in the eKYC? Name, age, gender, photograph of the customer, and if we want the data, we need to take the permission from the customer, and then it transfer all the data to the bank or the business corresponding to the business facilitator who is wanting that data. What's the requirement? The user, like I said, provides the biometric authentication. Without the authentication of the user, one cannot get the data from the UIDAI server. What are the alternate modes? We can confirm the identity and address through the authentication service of the UIDAI, which is the e-Aadhaar letter, and one can give and print the e-Aadhaar letter and give it to the banking official from the UIDAI portal only when the Aadhaar number is available in the e-Aadhaar. The basic KYC documents required for individuals, we need proof of identity and address via Aadhaar number or PAN number, or if someone has no PAN, then Form 60. We need photographs of all the individuals, including for Parda Nashin women. Like in cases of Muslim women, there is a Parda system where the woman covers her face in the veil. We need photographs of those women too before opening their accounts. We need documents regarding the nature of the business, and the financial status may also be required. And if there is any additional documents required, we should take these specifically for the high risk customers. Then for joint account holders, both the applicants need to undergo the KYC process, and the documents needed are as explained for each individual. For minor accounts, the KYC for the minor's guardian is required, along with the minor's birth certificate and the picture of both the guardian and the minor. For judicial entities or those who are non-individuals, specific documents are required based on the entity, including we need the beneficial owner or the proprietor of a partnership firm or anyone, and also the attorney holders, etc. What are the norms to obtain these documents? For KYC, the requirements of submission of documents are simplified to streamline the procedures. If you take the Aadhaar, then it is sufficient as a both identity and address proof. So OVD at customer level basically means that when a customer is opening an account, then he doesn't need to submit another OVDs for, let's suppose, the ATM he is being provided or the checkbook or any transaction he is doing. Only one OVD is sufficient for all the account related transactions. Then while opening a new account or transfer of account, for a KYC compliant customer, fresh KYC documents are not required for new accounts or when you are transferring it. If Aadhaar as OVD is on record, a self declaration for the new address is sufficient for opening or transferring the account. While using third parties, document collection and verification by third parties are permissible for non-resident customers. Non-resident customers of a bank, the third party can be used to collect the document and verify it. But there are some conditions. The third party must be regulated, supervised, monitored, and compliant with the Prevention of Money Laundering Act. The third party should not be in a high risk country. The information by third parties should be obtained within 3 days, and the third party should satisfy itself that copies of identification data and relevant documents are made available without undue delay. but the final KYC responsibility remains with the concerned bank who are recruiting these third parties. RBI has directed regulated entities to ensure that decision-making functions of determining compliances with KYC are not outsourced. So, this was the first part of this chapter. I hope you have liked it. The next part will be released tomorrow. And if you have any queries, do reach out. And for getting these notes, please fill up the form given in the description box and in the comment box. Until then, thank you. All the best for your exam.